Well, good morning. The markets are whipsawing back in the other direction again this morning, so that's good news. And of course, we'll be reporting on good news Friday later today, and maybe it'll be another big up day for Tesla. At least it started out that way. CEO Elon Musk said he does not support President Biden's recent announcement of a tariff on Chinese-made electric vehicles. That's no surprise. He says neither Tesla nor I asked for these tariffs, he said in response to a question from CNBC's Karen So during a question and answer session at the Vivitech conference here on Thursday. In fact, I was surprised when they were announced. I think everybody was surprised by these new tariffs. The Biden administration seems to be very much in election mode, trying to do all kinds of things to triangulate, to give away money. I'd say pretty incredibly, I don't know, don't like it. I'm no fan of the Biden administration, but I think this pandering is a sad look right now. The Biden administration last week said it was placing a 100% tariff on Chinese-made electric vehicles imported to the U.S. in a bid to stop cheap Chinese EVs from flooding the U.S. market. White House said Beijing subsidies are helping companies overproduce cheap, clean energy products like solar panels and EVs that outpace consumer demand. I'm going to be talking in a few minutes about the solar part of this, which makes zero sense to me. And anyway, I'll get to that in a minute. There's so much news this morning; it's unbelievable. So bear with me. This is going to be a little bit long. Tesla competes quite well in the market in China with no tariffs and no deferential support, Musk said. I'm in favor of no tariffs. Musk added he doesn't agree with tax incentives for EVs either. I'm in favor of no tariffs and no incentives for electric vehicles or for oil and gas, said the Tesla CEO. Pure capitalism. Oh, what a concept. What an idea. Yeah. Anyway, but this is not a new stand for Elon. This has been his stand all along. The article, though, says Musk's remarks come after he suggested earlier this year that Chinese EV companies will crush competitors elsewhere if there is no trade restrictions. He did say that, and I'd say there's every reason to believe that that's true, but that doesn't mean that you necessarily want to put in tariffs in order to stop that. As I mentioned the other day, I do believe that there is a reason for tariffs. There are times where tariffs are absolutely necessary. One of those is when you want to protect an industry that is strategically critical. So therefore, you do not want to get to zero on auto manufacturing in the United States. It would be a strategic bad mistake. You do need auto manufacturing as well as tank manufacturing, related kinds of things if you get into a serious what do you want to call it? Normal war? There's another name for that. I forget it. Anyway, so frankly, I think if there are not, this is the continuing the article. Frankly, I think if there are not trade barriers established, they will pretty much demolish most other companies in the world. All right, next article from Barron's. Nikkei reported Friday that Tesla cut production on the Model Y in China amid rising competition. The news will pressure Tesla's second quarter delivery estimates from Wall Street and rekindle fears of slowing demand growth. I don't think anybody bought this article this morning because the Tesla stock is up. There's no confirmation. There was no additional information. But I reported it because it was out there. I don't think it has legs. From the cool down, this is a TCD, you might see it sometimes, their logo. I don't usually use this source because it's usually extremely old news and also not usually reliable, but this morning I think it was reliable. And it said that Elon Musk on rumors, wait a minute, I'm sorry. I hope I got this right. This is what I'm sorry, let me go back. Let me first of all finish with the Tesla news, all right? And I'll go on to this article from the cool down. Elon Musk said this morning on X regarding rumors that SpaceX was going to do an IPO. He is responding to Mario Newfall. He says SpaceX has no need for additional capital and will actually be buying back shares. We do liquidity rounds for employees and investors every 6 months. So all articles that said that it was going to be an IPO, which got a lot of people excited, including me. But at the same time, I'm remembering Elon saying he's never going to take SpaceX public. It would be a horrible idea, as well as saying that he might take the Starlink division public, which would make some sense. But that's all, and that would be mostly, I think, to benefit the Tesla shareholders, the Elon Musk fanboys, because he thinks we deserve to be a part of that opportunity. Anyway, but maybe to raise money for Mars as well. All right. Now, well, this is Randy Kirk, by the way. Hit like, subscribe, and notify. Sorry to be a little bit jumbled here this morning on my information, not my information, but the order of my information. Please hit notify, because guess what? We'll have Scott Walter was on yesterday. No, Scott Walter's on today. Got Scott Walter today, Larry Goldberg tomorrow. So, you need to hit that notify button, and also could use some Patreon help. All right. I mean, seriously, it's time. Have you thought about it? Are you getting any value from what I do here? Help me out. Do you put $3 in a tip jar when you go into certain situations? Do you put $1 in a tip jar? Do you pay your waiter $20, $30 when you have a $200 meal? $3 a month, $5 a month. I mean, seriously, it's time. All right, this is this is back to that article again. This is what world-renowned hedge fund manager Pierre Andouran reportedly said about copper markets. He predicted that the price of the critical metal is set to quadruple to as high as $40,000 a ton over the next 4 years. The French fund manager, who is famous for his big bets on commodity markets, told the Financial Times that he believes surging demand for copper, which is set to play a core role in the global energy transition, will outstrip supply in the next half of the 2020s, causing the price to surge from current rates around $10,000 per ton. He says, I think we get it up at $40,000 a ton. I'm not saying we'll stay there. Eventually, we'll get a supply response, but the supply response will take more than 5 years. This is not investment advice. I'm just reporting the news, but you've heard me talking about this now for well over 2 months. You've heard Larry talking about it as a bird, the canary in the coal mine, but in this case, this is a special circumstance. It's outside the canary in the coal mine, analysis. What we're talking about here is a very big, huge demand. We're going to be talking about this a minute. In fact, we're going to talk about it right now. Let's talk about solar panels right now. Business Insider says, another okay source, but when I use Business Insider, I always read the article first in detail, make sure that it makes sense. China has made a lot of solar panels, they say, dramatically lowering prices and helping the country's clean energy transition. The problem is that Chinese manufacturers seem to have made too many solar panels. This is what happens with China. They've made too many consumer residential units. Now they made too many solar panels. They made too many BEV, or just in general, silicon batteries. And they're also now making too many solar panels. All right. According to the US, the European Union and their allies are now calling on Beijing to rein in their overcapacity of panels. This is nuts. Rein in their overcapacity of panels and other goods, raising prospects for a trade war. Why would they be asking them to rein in their overcapacity of solar panels? I'm like, am I ready to join the Greens? I mean, am I ready to flip over to the other side? Look, I don't believe in the problem. I don't believe we have an existential problem. Either does Elon Musk with regard to CO2. But I do believe that we need to get a lot of energy produced really fast. Okay, a lot of energy. We got to support the electric transition, which I believe is a good thing. As a youngster, when I was 20, 21 years old, I was out collecting signatures to get rid of the pollutants in the air. I believe in that 100%. I'm also an environmentalist. I believe that we need to manage the Earth's resources the best that we can probably do. And that means doing what Elon Musk is doing, exactly and precisely what he's doing. Okay, part of that is you need a lot more energy produced in order to support the EVs, to support the crypto miners, and also AI, which is going to suck up massive amounts of electricity. So all you folks out there that believe in the need for the future of green, all you U.S. leaders, you city managers, you state governors, you federal employees, you senators and congressmen, if we've got an oversupply of solar panels, bring them into the United States, take advantage of these low prices and start putting them out wherever you need to put them out, on the tops of buildings, over the tops of parking lots, into over farmland where you can use dual use, over rivers, ponds, lakes, and other situations, canals in California. Put them in all these places that make sense, and let's maximize. Let's go ahead and use this opportunity to increase the power supply in the United States and in Europe. I mean, okay, China's facing this overproduction problem at home following a breakneck pace of growth, one key pillar of their 3 economic drivers. But China has installed so many solar panels, they were generating excess power that the country doesn't have storage or transmission capacity for. It just goes away. It's not like it burns things down. If you make too much, it just doesn't get used. As of March this year, China, the world's largest solar energy market, had installed 660 gigawatts of capacity. The U.S., meanwhile, ended 2023 with 179 gigawatts. This is what I'm talking about. That's enough to power 33 million homes. Okay, but how many homes do we have? 150 million? We need way more. Chinese manufacturers are feeling the heat from solar panel overcapacity too. Germany's energy prices are under pressure from too much solar energy. What? All the articles you read from the Republicans, quite frankly, is that, oh my gosh, the energy prices are going up, electricity prices are going up because of the transition to green. No, the prices are going down dramatically. Germany, too, has been producing too much solar energy. Energy prices have fallen into negative territory where output peaks. But experts say they're just bumps in the world's energy transition from fossil fuels to green energy. Every country in the world that is installing a lot of renewables and then facing the challenges that arise from all this variable intermittent generation is searching for smart ways, intelligently AI-enabled or at least model-backed approaches to distribute the power by using it in the most efficient and effective way, according to David Fishman, a senior manager at the economic consultancy of Lantau Group. Certainly, that's where China is headed. And of course, what we need is lots and lots of battery storage. I'm sorry, another rant. I know. What are you going to do with Randy ranting all the time? CNBC says sales of newly built homes dropped 4.7% in April compared with March and fell a larger 7.7% from the prior year, according to the U.S. Census. March sales were also revised significantly lower. Why doesn't it tell me how much they were revised lower? Okay, I believe this is a seasonal problem. I've already talked about this. We had over purchasing in October, November, December, January, February, March. Okay, you had way more sales in that period than you would normally have, and now you're going to pay for it. Okay, I've seen this for my entire career in the bicycle business. The normal season for the real estate industry is March 15th to about October 1st, October 15th. That's when people move. That's when people want to buy. That's when the activity happens. That has always been true. As far as, okay, tell me if you don't think that's true. I know something about real estate. Okay, so what happens though is if you have everybody going out and buying stuff up in the off season, then a huge number of people who wanted to buy, wanted to move, wanted to do this, they've already done it. And so now you have lack of demand going into your normal season. Does that make sense to you? Please let me know in the comments if you disagree. Higher mortgage rates are clearly hampering sales. Yes, of course they are. And they were lower before, and then they were higher, but now they're lower again. So the average rate on the 30-year fixed mortgage was in the high 6 range to the end of March, but then went up to 7.5 during April, and now it's back down under 7 again. That's Randy adding that last part. Adding to that, the median price of a new home sold in April was $433,000, 4% higher than in April 2023, but the prices of existing homes are 6.5% higher. Some of that is due to the mix of homes selling. There you go again. All right, here's what's another thing that's happening. There are not enough homes under 400,000 or under 300,000, under 200,000. That's where the market is needing to build more homes. That is not, but the homes over $1 million, those are selling like crazy, and there's more of them coming onto the market. Toll Brothers reported strong earnings in their latest quarters, beating expectations and citing growing demand due to low supply. For all the happy talk from big builders who are taking market share, the entire new build industry is selling new homes at a pace below the 5-year average, according to CNBC contributor Peter Bukvar. In the first quarter of 24, 38% of median household income nationally was needed to buy the mortgage payment. Okay, never mind. I'm not even going to go there because I don't believe in this kind of your median income to buy the median home. No, real estate is local, and real estate has to do with the individual's specific need. Yeah, the big numbers, you can get something out of those. Some people can make some decisions whether to buy more homes or not. But the reality is, you look into the local market and you say, are there more $300,000 homes needed in this market? Are there more $1,500,000 homes needed in some other market? All right. Shortage of 1.5 million homes. The lack of housing units is the primary cause of growing housing affordability. There is your statement. Okay, that's Robert Dietz, NAHB's chief economist. Policymakers at all levels of government need to enact policy changes that will allow builders to construct more homes, such as speeding up permit approval times, providing resources for skilled labor training, and fixing building material supply chain. That's what's needed, and it's needed at the low end of the market. Then we can stop being upset about how the young folks can't afford a home. Well, I could do another whole rant on that. Market Watch says the number of Americans who applied for unemployment benefits last week fell again to 215,000, reaffirming that layoffs are low and the economy is buoyed by a strong labor market. Initial jobless claims have hovered between 194 and 232,000 units this year, a remarkably low level last achieved consistently in the 1960s. Economists polled by the Wall Street Journal had forecast new claims to total 220. So they weren't that far off compared to normal. So key details, the new jobless claims fell in 33% of the 53 states and territories that report these figures to the federal government. Claims rose in 21 others, but all the increases in those states were small. Omitting seasonal adjustments, actual new claims declined slightly to 192,000. That's an exceedingly low level. I agree with that. The number of people already collecting unemployment benefits in the U.S., meanwhile, did go up by 8,000 to 1.7 million. That means continuing claims means that people are having a harder time finding a new job, aren't trying that hard. Sometimes that's the case. But most businesses are wary of cutting jobs. This is the article saying this, and it may still be true that companies are doing okay enough that they're wary of cutting employees that they really need to cut and really feel that they could do better if they did cut because of the difficulty of finding those people should they need them in the short term. Okay, on the other hand, this from Market Watch also, the S&P Flash U.S. Services Index of Purchasing Managers jumped to a 12-month high of 54.8 in May from 51.3 in the prior month. These managers are in charge of buying supplies for their companies. The Flash U.S. Manufacturers PMI, meanwhile, also rose to 50.9 from 50 in May. Now, those are both good numbers. This is why my expectation for a recession is still only 30% compared to 70% no. I still think there's a chance, at least, that we're already in recession, and these numbers are either wrong or just aren't measuring the right things. But we're also seeing a bunch of negative stuff, other numbers that are suggesting we could be already in that recession, or we might be going into it in the third or fourth quarter. Numbers, of course, if you're over 50 on this particular survey, that's a good thing. Key details, new orders, a sign of future sales, rebounded in May after falling the prior month for the first time since the end of last year. So this is an increase for the first time. Employment levels were mixed. Manufacturers added jobs, but employment fell in the larger services side of the economy. Ongoing labor shortages were one of the culprits. We got some more information coming in a minute that might help explain some of this. The cost of raw materials rose sharply in May, however, and reflected the persistence of elevated inflation. Businesses sought to pass these price increases to customers by raising prices. The S&P survey suggests the final mile down to the Fed's 2% target seems elusive. The rate of U.S. inflation has gotten stuck around 2.7 to 3.4. The economy is unlikely to get fully on track until inflation slows and the Fed cuts rates. This data puts the U.S. economy back on a course for another solid gain in gross domestic product in this second quarter, according to Williamson. This also from MarketWatch. MarketWatch, by the way, has some of the best info and almost always the fastest. This is what the world-renowned hedge fund manager Pierre Anadron reported about copper. I doubled up on that one. I'm so sorry. Okay. This is durable goods. Orders for durable goods, according to MarketWatch, rose 0.7% in April, marking the third straight monthly gain. Economists had forecast a 0.5% fall. Okay, now this is a very good news. If this holds up, this is a very good news. But there's a problem. Watch this now. Economists had forecast a 5% fall, 0.5% fall. Excluding transportation's orders were up 0.4%. Core capital goods orders, which exclude volatile sectors like transportation and defense, rose 0.3% after a 0.1% fall in March. All that's good. Shipments of these so-called core orders rose 0.4%. However, much of the increase in orders came from the defense sector. If you exclude defense, orders were flat in April. Orders for transportation goods were also strong, rising 1.2% after a 2.5% gain in the prior month. So that's good news. So we got good news, we got bad news. The University of Michigan, according to Forex Live, consumer sentiment final for May is showing consumer sentiment at 69.1% versus 67.5 estimate earlier and a 67.4 preliminary. So each time they've redone their numbers, it's been a little bit better. But last month, it was at 77.2. So even at 69.1, which is way better than the 67.4 preliminary, compared to 77.2, it's not good at all. Expectations, 68.8% versus 66.5% preliminary, but last month it was 76. So expectations going forward. Current conditions, 69.5 compared to last month, 79. Still not great. 1-year inflation expectations has dropped a little bit to 3.3% versus 3.5, but it's still the highest level since December. All right, 5-year inflation expectations dropped also to 3.0 versus 3.1. All right, so all of that said, with all of that information, with all those positives, with all those negatives, what has the market done with this information this morning? Let's take a look. We have got Tesla up $3.57. It is topped off now. Seems like it's going a little bit sideways right now. But 3.757 is a real good number for today. We got the Dow up 22, the NASDAQ up 128. We got the S&P up 2629. With the NASDAQ up very strongly. So that yes, you can see that all of the Magnificent Seven are doing well this morning. NVIDIA is up a little bit, but Meta's up, responding. It's been down, down, down. Now it's up $10 this morning. Apple up 259. So NASDAQ, all the Magnificent Seven doing well. And the Cathie Woods are mixed, but very flat. Mixed, but flat. Very flat this morning. All right. Let's look at the percentages. You've got the Dow up 0.07%. So the Dow, which has really been taking a hit, the last serious hit yesterday, is barely recovering, but the NASDAQ is strong today, 0.75% up, S&P up 0.5%, and Tesla up 2%. All right, let's see how bonds might be contributing to any of that. You've got the 10-year actually up 0.4 of a basis point, 4.479, starting to creep up towards that 4.5. It's a long way from the 5% that we were, 6-7 months ago, but it is not directionally what I'd like to see.
2-year up 0.7 of a basis point, and the 2-month up 0.8 of a percentage of a basis point rather. So all of those moving in lockstep this morning. All right, oil. We have got oil sitting up 57 cents at 77.44. Rent up to 81, again, moving about at the same pace with about a, wow, that has crept up on me. That's now back to a $4.50 difference between them. So that suggests that the Europeans are having additional issues compared to us. But there's not like, oh, there is talk of peace this morning. Russia has asked for a ceasefire at current lines. I don't know. That's odd that I'm not understanding why that's now $4.35 higher, which the norm is $5 is really high in terms of that spread. Anyway, all right, I'll look into it more. Natural gas down again this morning, but still at very high levels, $2.59, but down 2.56% this morning. I guess it just got a little bit too far out there and now is falling back. That article we talked about yesterday morning suggested there was going to be a point where it's going to be a little too far out there. Okay, gold up 250 this morning after dropping like 5 days in a row, 2,338. Silver up a little bit also. Copper down a tad, dropping, after that article I just read suggesting we're going to go to 4 times these levels. It's at $4.78 this morning after being well over 5 last week and early into this week. The dollar is holding firm, according to the headline. The Bitcoin is up 587 at 67,888. So that's right in the middle of the trading range for them. And then that then would cover all of the major stuff. Going back to Tesla again, Tesla continues to modify. It's down under 2% now. It is $3.42 up. All right, please hit like if you haven't already done that. Please hit subscribe and please hit notify. If you did not watch Brian White's second video yesterday, I will put that one up. That was a very good video with Brian and I. Although probably the video you should really go back and look. Maybe I'll put it up as well, is last night's video with Nicholas Gibbs. He knows an awful lot about this AI stuff, way more than he's actually able to talk about. And he gave us some hints, though, about his unique insider knowledge yesterday. He went, I think, about as far as he could in terms of not giving away the store, if you will. So I'll put both of those up if you want to go check that out. All right. What else? Yeah, hit Patreon, would you? It really would be extremely helpful right now. I do thank you for all of your support. Now that I'm back from vacation, the numbers are back up in normal range again. That's been great. And you don't know how helpful that is. But watching is good. Liking is good. Subscribing is great. Hitting notify is a phenomenal thing. Watching to the end is really, really important, or at least watching for more than 5 minutes or 6 minutes. That's really good. That all those things help me out. But Patreon, that's a biggie. All right. Thank you so much. That's all for right now. And it's been great talking to you.